is the Bitcoin 4-year cycle broken? It used to be easy. Oh, just buy once we're deep in the bear market, chillax until Bitcoin's made new all-time highs about 500 days after the Bitcoin halving like clockwork. However, right now, even though big institutions like BlackRock and Fidelity are making it available for their customers to buy these Bitcoin ETF products, and they've brought in $36, $37, $38 billion of inflows, it's nuts. That being said, it seems like we've kind of been stuck ever since hitting those new highs at $109,000 for Bitcoin. But is that all the story? Well, stick around as we need to try to figure out if we need to change the way we look at markets, if Wall Street has changed the game. Now, before we dive in, let's do a quick refresher on the cryptocurrency cycle. You see, financial markets always move in cycles, and crypto is really no different. It's got its own rhythm with 4 key phases: accumulation, bull market, distribution, bear market, like every other market basically, but it's kind of had its own rhythm and rhyme to some extent. First up, accumulation happens after the market hits rock bottom, following a long stretch of stagnation where smart money buys, retail money largely out of the game already. Savvy investors, they scoop up everything at dirt cheap prices, betting on a recovery. Next comes the bull market, the party everyone wants to join. Driven by hype, driven by optimism, this is where most investors jump in, pushing prices to the frickin' moon. Then we hit the distribution phase. After peaking with massive euphoria and excitement, the market starts losing steam. Smart money is slowly exiting. The veterans are cashing out. Finally, of course, that leads to a run out of buyers. People aren't buying anymore because the prices aren't going up. Smart money's selling. Who's left to buy? Nobody. So prices start going down. The bear market kicks in. Everyone's going to start yelling, it's going to zero. Well, the rest of us turn into diehard community members who didn't sell anything. Shit. Holding on for dear life on the way down. There's a simpler way to look at it, though. Prices usually climb for about 3 years, then drop for about a year. It's a pretty brutal cycle, but that's kind of the way it's worked. Now, this chart here from Bitcoin Magazine shows how the cycles have kind of played out. The 4-year cycle is built on the idea that Bitcoin makes its big move the year after the Bitcoin halving, typically peaking around 500 days later. Now, Bitcoin Magazine also suggests Bitcoin might not just be following the 4-year cycle as we've known it so far. It could actually be part of a bigger 16-year cycle similar to the dot-com bubble. Think of it like this. Back in the 1990s, the internet was the hot new thing, just like Bitcoin is today. It went through a crazy hype phase. Internet stocks were super popular, and even though they weren't making money, they still went up like crazy. And then, of course, reality set in and they all crashed super hard in 2000. There was the dot-com bust after the boom. But the internet didn't die. It grew up and became part of everyday life. Based on this hypothesis, Bitcoin is on a similar 16-year journey. Early adoption from 2009 to 2017. A hype peak from 2017 to 2021. Our $69,000 Bitcoin NFT mania, followed by a crash in 22. And now an uptrend until late 2025, followed by a probable horrific bear market in 2026, unless this really is the super cycle and we just keep on pumping like gold did for basically 8 years straight after getting ETFs. Bitcoin might be growing up. It's being a big boy now. It might go mainstream just like the internet did, which means that after these cool-off phases, we just keep getting bigger and things start getting crazier than you even think they will, especially with the ETF money. If there's any parallels we can draw between Bitcoin and the gold ETF, is that Bitcoin can pump literally for years straight, which is insane. Now, before we get into the next part of this conversation, if you're a cryptocurrency trader, I know most of you guys are, then you need a great place to be trading at. Check out BitUnix, okay? One of the hottest exchanges out there right now. If you want to long the rips, short the dips, this is the place to do it, okay? They've got all the big coins, whether they're trading Bitcoin, Ethereum, Solana, you want to trade hot meme coins, whatever, they got you covered. And no KYC, no VPN. Anybody anywhere can use it. Just use the link down below, and that's all you need to do. You can get started, deposit USDT, and start going. $10 for free on sign up, just because why not? Get some free money to start with your account with. 20% deposit bonus. You deposit $1,000, get $200 back, and up to a $2,000 trading bonus. Go check it out. Link down below. Thank you very much. So the cryptocurrency community has known for a while the Bitcoin and the S&P 500 are pretty damn tightly correlated. The S&P 500 goes up, Bitcoin usually follows, altcoins often tag along with 10x the gains. It's not a perfect 100% correlation, but it's been close enough to notice. In fact, we correlate even more with the NASDAQ 100. Now look, none of this is too surprising when you think about it. Both crypto and the broader market react to the same big forces: market sentiment, money liquidity, geopolitical risks, what the Fed's doing, the global M2 money supply, the ISM, the inflation, all this kind of stuff. In January 2024, Bitcoin ETFs stole the headlines as BlackRock jumped in with their Bitcoin ETF, and more than a year later, BlackRock's iShares Bitcoin Trust holds over 574,000 Bitcoin worth $50 billion, or 2.7% of the 21 million Bitcoin supply. Add up all 12 US ETFs, so now sitting at 1.12 million Bitcoins, a whopping 5.3% of the total supply, and slightly more than Satoshi Nakamoto is thought to have. Now, the ETFs are the world's biggest holders. So here's the big question. If Wall Street's buying this much, where's the pump at, man? No, really, where's the pump? Why are we stuck in this sideways limbo? Even the $109,000 pump in January feels more tied to Trump's inauguration than to ETF buys. Shouldn't we be above $300,000 by now with all these institutions piling in, U.S. Strategic Reserve, GameStop, MicroStrategy, all this stuff? Well, the truth is, there is a lot of buying going on, but it's a lot of OTC buying, over-the-counter buying. So TLDR, BlackRock, Fidelity, and other ETF buyers aren't throwing, mass market bids on centralized exchanges like us shrimps do. Instead, they've got brokers sourcing Bitcoin outside of the order books. So it matters, but the impact's different. In past cycles, we always counted on retail buyers to scoop up our bags. That high school buddy who suddenly calls up and says, hey man, what's the latest dog coin that I should buy at the absolute pico market top? Yeah, that guy. He'll buy Bitcoin one day anyway. Those people were the reliable buyers out there for coins we grabbed during the crypto winters. But now, instead of buying on chain or on centralized crypto exchanges, retail is kind of starting to play it safe and just buying ETFs, which honestly, you can't blame them. No wallets, no private keys, none of the usual BS, just a few clicks through your regular broker, your Robinhood app or whatever it might be, and bada bing, bada boom, Bob's your uncle's fans, you're it, now you got some Bitcoin. You don't have to think about it. You don't have to worry about it. So with the adoption and the rise of Wall Street controlling a big chunk of Bitcoin's supply, is the ever-reliable 4-year cycle over, and are we just going to be tied to basically what the stock markets do, with just a higher beta, meaning higher returns versus the stock market? It's all still up for debate, and there's a large conversation on whether or not the 4-year cycles really just followed 4-year credit cycles anyway. It's a whole different conversation, but an interesting point to add in. But if this shift away from the 4-year cycle does happen, well, there are still macro clues that can show us where the markets are heading. For one, Bitcoin's a risk asset, just like stocks, so they both follow the money. I'm going to talk about it again, guys. Go get the wife, go get the kids. We're talking about the global M2 money supply. Let's go. The M2 money supply is a big clue for spotting the next pump, okay? When M2 accelerates, meaning there's more money floating around, it's basically a solid sign a pump might be coming. Now, we've covered this in a separate video. I'll leave a link down below for it if you want to check it out. It's pretty informative if you're still trying to get up to speed on what this whole M2 thing is. There's also the economic business cycle, which the broader economy follows with its own 4 phases of expansion, peak, contraction, and, of course, trough. But here's the big difference. A business cycle usually lasts about 5.5 years, and sometimes much longer. For example, the longest U.S. economic expansion on record was actually from June 2009 to February 2020. It lasted 128 months. And that was just the expansion phase, okay? So that was definitely not following any kind of 4-year cycle. So maybe the 4-year cycle breaking might actually be a good thing. Imagine a crypto bull run stretching over a decade. Oh, I'm tired just thinking about it. But that's what happened for stocks. Now, here's the thing, too. By the way, if you want to dive deeper into business cycles, link down below to that video. But here's the thing. U.S. business cycle right now is at the bottom, meaning it's moving into an expansion phase, right? So it's going to go up for a while. Global M2 currently pumping. We're likely to follow both of those things, not mega bear markets around the corner, right? So look, are we just going to sit here and twiddle our thumbs waiting for the 4-year cycle to prove itself again? If your plan is, of course, just to hold Bitcoin long term, then yes, twiddle away. Don't sell till the 2030s when we're at $1 million. Holding BTC has always been a safe bet, but if that feels too boring and you're craving some action, well, look, I'm not holding any altcoins super long term. When this market cycle gets heated up again, it's time to start taking money off the table again. Sometimes you got to cut your losses with some coins and move on. Some you just, hold for the short to medium term and take your profits on. By the end of the cycle, wherever that ends up being, all my altcoins are getting a divorce, getting sent packing. See you later, guys. Thanks for the good times. That doesn't mean I'm done with altcoins. Altcoins are great, but Bitcoin's a main squeeze, okay? Altcoins, of course, are where you look for outsized gains with outsized risk. I'll still trade. We're still going to do some spot altcoins, all kind of stuff. Obviously, still lots of fun to be had there. But long term, a lot of this stuff leaves a lot to be desired, okay? Lark, you're missing out on gains by not holding on to promising altcoins. Oh, I know. But I don't want to hold altcoins down into a bear market. I don't think we're at a bear market phase right now. I know there's a lot of conflicting information. Chart stocks, crypto charts, stuff's looking pretty rough right now. Okay, I get it. But then we have things like the M2 and all this stuff that provide us with a backdrop that could see prices still rally much higher later this year. And looking back at the 16-year cycle, the dot-com bubble, after the bubble popped, a lot of stocks never recovered. And that's going to be the same with crypto. In fact, it's been the same with crypto for most cycles. Most of the hot coins now, in 4 years' time, no one even knows their names anymore. Now, the end of the dot-com cycle marked a big shift. A mature market had to weed out the weak players. The same could happen in crypto. The same is happening actually in crypto multiple times. Every big market crash weeds out the weak players. Now, some altcoins will survive and thrive. Maybe Solana is going to be the next Amazon. Sui's going to be the next Google. Ethereum the next Nokia. If you know, you know. But the problem is, we can only guess which ones are going to make it and which ones are not. That's why I'm focused on stacking Bitcoin, because Bitcoin's a no-brainer. It's the digital gold, man. It's the OG crypto coin that's not going anywhere. I'm not sure if we're going to hit Michael Saylor's wild $49 million per Bitcoin price tag by 2045, but holy shit. I guess I don't know if I'll even have any Bitcoin by that point. If it goes up to $10 million a coin, I'm out, man. I'm out. See you later. Thanks for all the good times, Bitcoin. Peace. But it will be worth millions one day. That's for sure. Only question is how long you can wait. How patient are you? Finally, zoom out from crypto-only indicators. Keep an eye on the bigger forces, the M2, the major economic news, all that stuff. Okay? Because it matters. Now, more than ever to crypto, it matters. Bitcoin and crypto are growing up. The industry is maturing. Wall Street's here in the biggest way possible. It's a freaking strategic reserve asset of the United States now. Okay? Okay? Thanks for watching.